It is Saturday at noon, and this can only mean one thing. It is time for yet another power scanning session where we will once again look for the most promising swing trading setups for the week and the weeks ahead. My name is Daniel. I am greeting you once again here from Montreal, our beautiful, hometown, so to say in Canada. It's a beautiful day today. Finally, it's warm, warmish, 19 degrees centigrade outside, a nice breeze, blue skies, a beautiful day. The right time to start the hockey playoffs, actually. Interesting time today. The NHL playoffs are starting. Montreal qualified for the playoffs, which is a big deal. We rebuilt our team. We have a nice young team now, and people are very hopeful for this year's playoff season. And fun fact, even though Montreal, I'm going to come back to trading afterwards. One fun fact for those of you who don't know, Montreal is kind of the Bayern Munich of the NHL, the record champions, so to say, with by far. But they haven't won in the last 30 years. So all their wins were way back in the past. But people are hopeful for this year and especially for the years to come. So we'll see what's going to happen. I'll keep you guys posted. Nonetheless, I digress. Where are you guys calling in from? Who do we have in the room today? So I'm greeting from Montreal. Who else do we have? We have Danica from K-Town, Kaiserslautern in Germany. Hey, Danica, nice to have you. Aubrey from unseasonably wet Cyprus, 21 degrees. Well, that's nothing compared to Montreal's 19, Aubrey. What's going on over there? Linda from Orangeville, Ontario. Hey, Linda, how's it going? Kevin from from North Carolina. Not much is shaking. I'm excited for the hockey playoffs. And of course, for the markets, exciting times. Daryl from San Francisco. Hey, Daryl, good morning to you. Must be early there, 9 a.m. Arkin from Wuppertal. Hey, Arkin, nice to have you. Jens from Frankfurt. Hi, Jens, how are you? And Arkan is hailing us from Baden-Baden. Well, very well done. Hi, Arkan, how are you? And Donna, we have from Virginia Beach. Ralph from the Black Forest in Germany. And we have Andrea. Oh, not from Hamburg today, from the Canary Islands. Very nice. Yeah, enjoy your vacation down there. Thank you for tuning in during your vacation for our live scanning session. All right, guys, thank you so much for sharing your location with me. Let's get into it. All right, so once again, today we will be looking for swing trades. Give or take, a swing trade takes between 1 and 20 weeks. The exact duration is not really important, but what's important is that a swing trade, unlike a buy and hold investment, a swing trade needs to be managed. You will need to keep an eye on your trade throughout the week to see when would it be perhaps be a good time to book some profits, maybe close out the trade, reduce your position size. So it's not a buy and hold trade. A swing trade needs to be managed. Please keep this in mind. And we're going to discuss what this means throughout this webinar when we revisit some of the trades that we recommended last week. Also, what we're going to be doing today is termed the 13 minutes strategy. Once again, the number doesn't really matter. What matters is that it's something that you can do very quickly on your own. And not just on the weekend. This is something you can and should be doing after the close of every trading day. Spend a couple of minutes, spend 10 minutes, then spend 15 minutes after the market has closed to see, hey, what has become interesting? And then when the market reopens, you check, hey, is this setup still valid? Did we perhaps gap away from it, so it might be not relevant anymore? But if it's still valid, maybe execute the trade. And this is how we at Trading Indicators are finding our trades. This is how I personally find my own trades for my own investment account. And this is how our users use our dashboard. Now, who are we? We are tradingindicators.com, and as our name suggests, we specialize on creating innovative trading indicators. And by the way, just a little heads up, in about 2 weeks from now, we will be releasing our latest and greatest indicator. It looks very promising. It will eventually find its way into the dashboard as well. It's going to be released for the individual platforms first. Super excited. I've been testing it out for a couple of weeks now. It's pretty cool. But anyways, that's what's going to be coming in 2 weeks from now. So we specialize on creating trading indicators. We've built more than 1,000 of those indicators. But what we also found out is that, hey, having your indicators on the chart is one thing to be able to make sense of the chart. But what if you have thousands of charts and symbols to choose from? How do I know which symbols right now have something promising to show? This is where a trade scanner comes in. And this is exactly what we're going to be doing today. We will be using a trade scanner to eliminate, the setups that, or the symbols that are not so relevant right now for swing trading to find those which have promising setups. So we're gonna, eliminate thousands of symbols to focus on those couple of few symbols which have setups right now. This is exactly what we'll be doing today with our trade scanner. I do need to remind you that, however, trading does contain risk and therefore is not suited for every investor. If you trade, make sure to only use risk capital, which is money that you actually can afford to lose. When it comes to backtest performance or hypothetical performance, keep in mind that this is not necessarily indicative of future performance, and any trade ideas and strategies and setups discussed in this webinar should not be construed as trade advice. These are for educational purposes only. All right, so with this out of the way, let's get started. I'm going to start with a couple of housekeeping items. First off, we will be using our trade scanner called Liquidity View to find these setups that we're looking for. It would be best if you followed along interactively, if you use the very same steps that I will be using today to find the same setups. For this, you will need to have access to our Liquidity View dashboard. If you don't have access yet, you can get trial access right now, here now, by simply going to tradingindicators.com. Follow those steps to get access. You will have to put your payment information. You will not be charged for an entire week. You can cancel at any time if you don't want to keep it, but this will give you access right away. So tradingindicators.com for this. And Nicholas has already put this into the chat. For those of you who already have access, and perhaps for those of you who just want to find out what is even possible with our dashboard, you can check out our bootcamp at tradingindicators.com/bootcamp. It's very comprehensive. It's 3 hours long. It covers every single feature of the dashboard. And I think this is the third time we've recorded this bootcamp. And we keep re-recording it because this dashboard is very lively, meaning we constantly are adding new features to the dashboard. And in fact, what I'm showing you today is a new feature which we have just introduced. It's still on our staging site, but as of tomorrow, it will become available on the actual site as well. So please stay tuned for this. We also have a Discord channel at tradingindicators.com/Discord, and we have an ebook available. All these links are in the chat. Nicholas, please put all these things into the chat for the ebook called The Power of Three. It's tradingindicators.com/power of three. And lastly, if you have any feedback, and I've received quite a few emails last week with some suggestions, some of them really, really well thought out. So thank you guys for that. We are taking all these into account. And if it's possible, if it makes sense to us, we are happy to implement your ideas into our dashboard. So please make your voice to be heard to and bring in your suggestions. Mention those to us, write us an email, put them into the Q&A box here in the Zoom call so that we can take a look and potentially implement it. All right, so with these housekeeping items out of the way, let's start with our market review. So what has happened last week? Let's switch over to our dashboard and, well, let's start with the SPY. Oh boy, who would have thought? I guess some people have thought. We theorized about it that this may become a V-shaped recovery, just like, of course, we mentioned this before too, just like the V-shaped recovery that we had seen about a year ago when it was about the tariff wars. This recovery is similar, looks like a V as well, with a slight variation. And again, this is just a small technicality. It's not really important. It took the recovery 1 year ago a bit longer to reach the all-time highs and eventually break above resistance. Here in this case, we immediately made it to the all-time highs and immediately also broke above it. And what is kind of interesting for me, you can see there was resistance right here. You can see this resistance line here at 1 year ago. Prices took a while to approach it, but once it was approached, we immediately broke above it. What happened this time? Look at this. I'm going to quickly remove these labels here just to have this a bit more clearly shown. 1 second. Give me 1 second. There we go. Okay. Now, also here, we approached the all-time high resistance level. We had a liquidity capture event, just like what we had here. And then we broke above it and didn't bounce off it. We broke above it. So pretty much picture perfect of what has happened about a year ago. And if we take the stand, this is just, the idea of that history can repeat itself. If we, use this example from 1 year ago, what might be happening next? Well, if this will repeat itself, we will see another move up, followed by, in about 2 to 3 weeks' time from now, a level 3 correction to the downside towards the broken level, towards this broken resistance level here, which then can act as support. That, who knows? It's a very simplistic view of looking at things, but if history is repeating itself, we'll see higher price levels in the next couple of weeks, perhaps towards the 120, 130 level, then a correction, potentially a level 3 correction on trend radar, and then a continuation of the uptrend. We'll see what happens, but it's interesting to theorize like this. What this could mean for you as a trader, well, if this becomes true and if you see some bullish signs on Monday, maybe one approach could be to simply enter long after the zone break. This would be our classic zone break trade. It's part of our setups that we often trade. Anticipate an initial move up perhaps to 730, then book your profits, wait for the pullback, and then re-enter into this long position. Just one idea that we could potentially execute on Monday, but of course, depending on what will happen when the market open on Monday. All right, so that was the SPY. What about the QQQ? Same picture here, same difference, kind of in that sense that also here we had the V-shaped recovery. We came up really quickly, broke above the all-time highs, and now we're trading at historical price levels also here in the Qs. And of course, the Qs and the SPY are also are often correlated, so no big surprise there. What about the IWM, the Russell 2000 ETF? Yeah, I mean, all the indices are firing up. Also here, all-time highs on the Russell. Oh boy, everything is at record highs. Which I'm happy about because I, of course, like most of you probably have strategic long-term positions in the big indices, so they are pulling higher, which caused some gains there. But now, once again, it remains to be seen what will happen after this breakout. So all three indices with breakout signals on Friday, big push to the upside. All right, so let's move on to what should we look at next? Oil, USO. All right. So we mentioned it last week that oil potentially will not be able to sustain these very high price levels, especially if there are signs of, negotiation of bit more lenience in the war in Iran right now. So oil came down with a couple of gaps here. I think if de-escalation is continuing, we will see lower price levels in the future. Would I trade accordingly? Probably not. It's way too volatile for me. There's too much uncertainty when it comes to oil prices itself. I believe, in 6 months from now, we will be at the 87 level again, or even less. That's my theory, but that will not be a swing trade. So you can speculate like this. Potentially, I think that's going to happen. But when this will happen, how fast we're going to come down in the oil prices, that's still a big question mark. So from a swing trading point of view, it's a bit too risky right now. There's too much volatility, too much uncertainty involved. And even if you're thinking maybe I do something with options, if our theory is that prices are going to come down even further, maybe buying some put options. I'm not so sure because options are expensive. Look at the heat index, USO 13.14. That's excessively expensive. So they are almost not affordable. Super high prices. You pay 13% premium for options with 30 days to expiration at the money. That's big. Yeah, that's a lot of money. So that's not really something I want to spend. So I'm going to just stay away from USO for the time being as a trading instrument. Let's look at gold, GLD. All right. So gold is pushing higher nicely. And we theorized also, here you can see these little boxes along the way. These were drawn back a couple of weeks back that we had a couple of down gaps here in GLD, which haven't been filled yet. I believe these will fill over time. We filled the first one, so this one has been filled now. This would be the next one here, and I think this could be our next price target in gold, 558. And the ultimate fill will be this gap up here at 489. So 458. 458 here and up here at 489. So I'm bullish in gold. Would I enter right now? I'm not sure. Maybe we're going to see a bit of a correction. I'm hoping for that. this would be a nice entry point. Now things are, already moved quite a bit, especially for our magic zone here on 400. This was a nice trade idea that we had in this webinar. Prices moved up nicely from there. And now we're kind of in the middle between support and resistance up here. All right. So what about silver, SLV? All right. So similar here, we also pointed out that silver may have found a button a couple of weeks ago. In fact, we had a couple of silver shares and stocks and even the SLV as our trade idea back then, where we thought and theorized potentially silver found a bottom. I'm going to see higher price levels in silver. Luckily, this panned out. And now we're trading also here in between support and resistance. And I believe our target, our initial target of this intermediate resistance level here at 85, probably would book profit at 83 or 82 already, is very much in sight right now. This may still take a couple of weeks until we get there, but this is our theory that prices may revisit this level here. And I think then it remains to be seen, because this sideways channel in which we're in right now, these blue lines here, this may extend a little bit into the future. So I don't think, well, who knows, but at least the way I see it right now, I don't think we're going to see price levels of 109 anytime soon. Prices may oscillate a little bit in between these two levels for a little bit. All right. So, and then what else do we have? We have Bitcoin. All right. So Bitcoin is exciting. I was very happy to see prices push up. On Friday, we went above the very much cited level of 76,000, 74,000. So we're above it, but in my view, not completely out of the woods yet. What do I mean by this? I still think that we're still touching these levels. You can see every single candle is still kind of touching these levels. So we haven't seen a candle where we completely were free above these levels here. I think this to me would be the ultimate test. Hey, now we finally broke above this level. So we're still touching this. And I think there might still be a chance that we will bounce off these levels towards lower price levels. And if you look at today's price action, of course, Bitcoin trades 24/7. The markets are open right now. Prices came down to 75,000 or 76,000 right now. So right in this level still here. So I still want the price to be completely above these levels, which then I think will be the trigger for the bulls to be back in charge in an attempt to reclaim some of the losses that we occurred over the last months in Bitcoin. So that's my take here. So I'm also going to be waiting here for prices to clear this level completely. All right. So this was our market review. Now let's have a quick look at our trade ideas from last week. As you know, we always are creating a watch list in these webinars, and the watch list from last week is this one down here from April 11. And we picked all these 10 stocks. Did I make a mistake here? Oh, I think I made, you know what I did, guys? I think I made a mistake here. I was playing around with some stuff yesterday in preparation of this webinar last night, and I accidentally added some symbols here. I'm going to remove these because these were not part of them. It was, and also IMAX, this one here, and Coke. These are relevant today. We're going to see these ones today, but they were not part of the watch list last week. I'm sorry for this. If you've seen these symbols last night, I think I must have dozed up. I put them into the wrong watch list. I have my internal watch list up here, which I use for preparation. I simply put them into the wrong one. So these were the 7 symbols that we picked last week. And if you watch last week's recording, you'll find these same symbols there. So let's check it out. Which ones do we have? BlackRock Energy. Yeah, nothing really happened here. It's an interesting symbol. We had this classic zone break retrace setup here where price broke above resistance, initially goes up, then comes down in a pullback down to the broken resistance level, which can be the trigger point for another leg up. So prices stopped exactly there, a bit lower than last Friday, but nonetheless still very much still valid setup. And I still believe you're going to see higher price levels from this point on. So the setup is still valid. Next one, DigitalOcean. And I forgot who it was last week who said she or he sold some puts when prices came down to this level. Wow, what a trade that was for you. Congratulations. I'm sure you bought back these puts a long time ago. Look at this beautiful setup. Prices broke above resistance, came down to our entry level, and then they flew off. So if you invest into the stock outright, Of course, you have a nice profit right now. If you sold some puts, I'm certain that you bought them back already. And selling puts was a really interesting strategy last week because option prices, you can see it here, options are very highly priced. 13.34% right now, and last week I believe it was even higher. 4 options at the money with 30 days to expiration. That's a lot. That's a high price tag. So everything above 10 is a high price tag. So if you did this, congratulations. Let me quickly see if somebody did this. No, nobody commented on this. All right. Next one, Cloudflare, another beautiful trade we pointed out. Yeah, also here we saw a beautiful bounce of our resistance level towards higher price levels. Also, this symbol would have been a good candidate for selling short puts. So everything worked out nicely here. Palantir, also a good trade. Look at this beautiful bounce with a liquidity capture. This is what we saw on last Saturday. Remember, prices came down to support. Last bar had a liquidity capture event, this little shaded box here, and then prices flew up. Beautiful trade here as well. Then we had Rheinmetall, a German weapons company. As prices approached this lower support level here, we bounced a bit, now struggling a little bit with this intermediate broken support level now acting as resistance. So we'll see what happens here, but also this trade in theory is a bit in the positive. And we have also SAP, Scandinavian car and military producer, I guess. Here prices came a little bit below this level. To me, that's still fine because oftentimes I mention it, when there are two levels close to each other, like this one here at 610 and this one here at 588, oftentimes it's the lower one, which is the more powerful level. So I believe you mentioned this. If we were to take this trade, our stop loss would be a bit further away, giving this trade a bit more room to play out. And then we had the WR Berkeley Corporation. Also here, a nice bounce off this support level. Now at higher price levels, also this trade is very much working out so far. All right, so these were the trades from last week. Pretty good performance. I was happy to see, especially DigitalOcean and Cloudflare and Palantir move up very nicely. So let's see if we can repeat this performance this week. All right. Are there any questions?
We've got a couple, Daniel. So we have one.
Yeah.
Dan, can you tell me what the number of captures means in Liquidity IQ?
Yeah. Okay, so that's a good point. Let me go back to Palantir. This was such a good example last week. Okay, so, and then I'm going to come back to the scanner. Now, last Saturday or last Friday when the market closed, April 10th, prices came down to this support level here. And we had this, and in fact, let me quickly enable this label so we can see it a bit better. There we go, on. And we had this liquidity capture event on this bar. You can see it here. Last bar, liquidity capture event. This little shaded box here, that's what we call liquidity capture event. And all these events always happen when prices near a key level, either support, but they can also happen up at resistance. So prices near this level, it cannot break this level fully, so it's still in the vicinity, and this candle has abnormally high volume. This will create such a liquidity capture event. And the interpretation is a bit agnostic. You can have your own interpretation, but the way we look at these things is that, hey, for some reason, trading has gone up at this price level. And perhaps one could argue that, hey, maybe others are finding this price level where Palantir was at 125 at the time as an interesting level and perhaps engaging in buying some additional shares of Palantir, driving the price up in the process. That's kind of our way to look at these things. So this is a liquidity capture event. Now for the number in brackets, if I go to, I believe you saw this one in the liquidity capture column, this one here, probably this one here, this number here. This number 6 in this case indicates that this symbol had a liquidity capture event at support. That's why it's red. It can also be at resistance, but at support in this case, 6 trading days ago. So if you count the candles, that was exactly last Friday. 1, 2, 3, 4, 5, 6. That's what this number means. Okay. Same for Cloudflare. Here, 6 trading days, you will find a liquidity capture event on your scanner. Look, beautiful. Liquidity capture right there. What a bounce it was afterwards. So I hope this clarifies it.
Thank you. And one other question. Masa says, what are the green zigzag lines on the chart? I think she might be referring to the MA rush lines.
Yeah, these are Amy Rush lines. So it's another good question. Let me go to maybe BlackRock to see this a bit better. All right. So yeah, so here, like in a in a strong trending stock, we see these green lines very often. So these are average price lines generated by our MA Rush indicator. This one here on the chart. If I remove this, it's this indicator here, MA Rush, which prints these lines onto the chart. These are price averages, which oftentimes can act as dynamic support. You can see it here. So the price came down to the first line and bounced off nicely from it. It's also an indication as to how far prices are extended. For example, here when prices went all the way up, see how much space there is from the price to this first line down here. And for us, that's oftentimes a warning sign. Hey, we don't want to enter up there in the ozone layer, as the option professor would say. It's too expensive and the chance of a pullback is too high. We like to wait until prices come down to the averages and then engage into a trade. Because prices eventually will always come back to their means. And why they are zigzaggy and not smooth like a regular moving average. So you may ask, and this is another good question. So let me just put a regular MA on it. Here, moving average. Make this a bit bigger. Something like this, and make this a little bit thicker just for the fun of it. It's good to have a bit of fun with these things. So you can see here this blue line is much more smooth. I guess it is. It's more smooth. Whereas these lines down here, they're more like zigzaggy. This is because the way this indicator or MA Rush indicator calculates these levels is it uses multi-time frame and higher time frame analysis. Because it uses the weekly time frame, the 3-day time frame, the monthly time frame to come up with these numbers. And this is why it's a bit zigzaggy. A regular moving average only uses the chart time frame, and by its very different definition, therefore, it's very smooth. All right. So I hope this helps. All right. Any other question?
When trend radar is all red, is it a good idea to take a liquidity capture long trade, or would you consider this high risk to go long?
Yeah, I don't know if I mean, it's not the perfect setup. I prefer trend radar to be not all red, but of course, oftentimes we take these setups. So why? So ideally, what I like to see, I like pullbacks like this, like level 4, 1, 2, 3, 4 levels down, or 3 levels down. That's what I like to see. To us, this pullback is right in the sweet spot. It's not too small where it's not meaningful enough, and it's not too big where a potentially an entire trend reversal may be at stake. But this is just the ideal scenario. Oftentimes we don't have these ideal cases, and we do take trades when they're all red here, especially when we have a liquidity capture event involved and MA rush, our long-term trend indicator. Where is it? 1 second. Here, our long-term trend indicator is still bullish. Then we still take it when everything is all red. Hope that clarifies it. Okay. Any other questions?
I think we're good to go.
Yeah. And Dan, real quick, why is the chat disabled? What we do here is we use the question and answer box for these questions. That way we can keep track of it easier because we can flag them as answered and keep track of these easier. The chat is only used for us to post messages to you, but you cannot post messages there. All right, and Mars, real quick for Masa for just because we had the symbol here for DigitalOcean, the stop. What did you say, Masa? One quick. The long stop shows 131. Is that too high? Let me just see. 130, what? Oh, DOC. I'm not sure what you mean there, but yeah, it would definitely be too high. Not sure where you see that stop. Let me put my indicator on my target level here real quick. Masa, I'm not sure not sure what you mean by this. Oh, there we go. But let me just quickly put the long and stop. Oh, the target at 131. Yeah, it's too high. I think so. That would take too long. That's more for, yeah, I think it's too high. I personally just don't use these values at face value without second guessing. So if I was in this trade for DigitalOcean, I probably would be out of it right now. Especially if you're short put, you probably have a nice gain to be made. Close it out and move on to the next one. All right, perfect. Now let's move on because this was just happening in the past, but of course we want to talk about what is going on for what has happened this week and which setups have become relevant right now for trading. And as you know, we typically always look for the same setup. It's tried and tested, so to say. It's something that works really nicely for us. So why change a winning recipe, so to say? Let's see what the setup is. Now, what we're looking for are stocks, which are already trending. The trend is your friend until it bends and ends, but the trend is your friend, and the chances of a trend to continue are simply higher than the chances of a trend to reverse. So if you're looking for a long entry, then it would be nice to already have a stock which is in a long-term, well-established trend. The longer the better in our book, and the more smooth the trend is, the better it is, the more stable the trend is. That's a precondition for everything we'll be considering today. Secondly, as you know, there are good moments to enter into a trend trade and not so good moments. And one not so good moment, for example, is when prices are very far away from the averages, from the mean. Look at this peak here. Look how far it is away from this line here, this first line. That means prices are very extended. They're very expensive. And the chance that we will see a pullback and a reversal to the mean is very high. I don't want to enter at that time. It's too risky for me. I patiently wait for prices to come down a bit. Now, ideally, in an ideal world, I mentioned it before, I'm looking for what we call a healthy pullback, which is not too small and not too big. It's just right. And we consider a healthy pullback a pullback where we go down to level 3 as per trend radar or a level 4. So the first 4 rows are red or the first 3 rows are red while the rows below are still green. That's a healthy pullback in our book. It doesn't always come to that. Sometimes we take trades where it's a bit bigger of a pullback, but that's the ideal case. And then the kicker is we want this pullback to coincide with a key level. So we want prices to come down from the top down to a key level, which could be a support level, like in this case, maybe topped up with a liquidity capture event, which would be everything in our favor, or we're coming down to a former resistance level. You can see it here. Prices are coming down to this level. It used to be resistance, but since it has been broken, now acts as support, and then we're taking off to the upside. So we call this setup here the long break retrace setup, and the first one here we call this the long bounce setup. There's one more case where it might be interesting to find trades, which is our zone break setup, where a level is broken. This can happen to the downside, like here, or to the upside when resistance is broken. And one prominent example of when resistance is broken, we know this, is the SPY. It just broke above its resistance level. Last bar here, above. And now, again, my theory is we're going to see 730 and then a pullback down. Maybe I should draw this in here just for the fun of it. I could, put myself out there, maybe move like this, and then a bit of a correction, and then we're going to see it further up. That's my theory for the SPY. Of course, I might be completely wrong. Don't take me at face value. This is purely based on the fact of what I observed last year when we had the exact same pattern. Break, down, move further up. We'll see. All right. So these are the 3 setups that we will be looking for. And now let's scan for them. So how can we scan for these bounce setups, these setups where we come down to a key level and we want to enter? So this zone break setup here would not be one of those. This, of course, is also tradable, but let's find a setup where we are trending and we came down a little bit to a key level. So how can we find these? All right. So what I'm going to do, and I'm just going to hide a couple of columns. We're going to come back to these later on. We're going to enter into our scanner the criteria that we need to be bullish for a long time. So we're going to use our MA Rush column here. MA Rush is our trend indicator, and select the filter here, bullish for at least, let's say, 500 trading days. Why 500? Well, it's kind of arbitrarily chosen, but it means that, hey, the uptrend must have been going on for at least 500 trading days for this trend to be fully established, I would say. If we look at some symbols here, like the AIB Group PLC, whatever that is, we can see, okay, that's a nicely trending stock. Look at this, long time, trending up, up, up. You can see all these, boy, this is a really long-term trending stock. Let me quickly see, where's our trend radar label? Rush label? Even more, Jesus. 1 second. There we go. Probably here. There, since March 2021, this stock has been trending up. These are the kind of trends I like to find. All right. Now, that's our first condition. Condition number 2 is you want to see some sort of pullback. Yeah. Either level 3 or level 4 on our trend radar indicator. How can we find these pullbacks? All right. So for this, we have this pullback column here in our scanner, and we can select the filter and select here, okay, show me all the trending stocks which currently pulled back at least 3 levels as per trend radar. So we have 21 here. And I like to also select level 4. So either level 3 or level 4. Done. So now we're down from our originally 6,209 symbols to only 54. That's very much more manageable. And the first one here, for example, that comes up is the Antero Midstream Corporation. Look at this one here. It's a beautiful one. Nice long-term uptrend, came down level 4. We're not close enough yet to this level here, but potentially we may think about scaling into a position here, anticipating, okay, this long-term uptrend might continue into the future. So this was condition number 2. Now the kicker is that we also want this pullback to coincide with a technical level on the chart. So for this, we're going to use our Liquidity IQ setup column here, this one, and select either long bounce, means price came down to a key support level, or long break retrace. And look, of our 6,209 stocks, only 4 stocks are remaining with these criteria. We're going to ease them up a little bit later on, but let's see what we found here. Atmos Energy Corporation. I like it. Look at this one here. Nice long-term uptrend, beautiful uptrend. In fact, prices came down from the high here down to be closer at least to this broken resistance level. Let me just quickly hide our labels here so it's a bit less convoluted on the chart. There we go. So we're coming down to this level here. And I personally would, however, wait a little bit for prices to come down a little bit closer, maybe to this level here, to around like 180. We're at 186 now. It's not very far away, and then potentially think about a long entry. But nonetheless, I like the setup. I'm going to add this one to our watch list for next week. So for this, I'm going to create a new watch list. All right, create weekly swing trades 2026. Did we spell it like this? 1 second, guys. How did I spell it? I want to use the same. Oh, colon. Okay. 1 second. 1 second. Great. Oh. I hope I didn't break it. 1 second. Sometimes you may notice from using Windows, sometimes it helps to restart the dashboard. I'm going to double check this afterwards. And Nicholas, maybe take a quick note of that. So create. There we go. Okay. Weekly swing trades, colon 2026 0418. There we go. Okay. So it's created. I'm gonna add Atmos to this list. Perfect. And I'll do one more thing. I will now share this watch list with you guys using my magic share button here. And I will unshare the list from March 14th. Because as per our agreement, we are only sharing the last 5 watch lists with you. Do not clutter your space. Perfect. So that's done, and Atmos is there. Next one, a Neuberger Behrman Income Fund. Complicated name. Well, not so complicated for a German, but nonetheless, very complicated. Yeah, interesting Zombig retrace trade. Let me just go back a little bit. It's one of these income funds which pays out dividends every month. Which of course is a great thing. You collect a dividend every month, and if the price of the fund also increases, it's even better. Just go to see where we are coming from here. In the past, yeah, it's been a nice uptrend since May 2021. Yeah, I like this setup. Not sure. I want you to read up a little bit more what the implications are to invest in such a fund in terms of tax and so forth. But from a technical point of view, that's an interesting setup. I'm going to add this one to our list as well. All right. Perfect. Moving on. RTX Corporation. Oh yeah, look at this. And if you're wondering what is this square here, I drew this in my previous webinar. What a nice trend. Look at this. Very smooth coming up. We broke or we made all-time highs here back in March 2026 and the retracement down to this key support level. I like it for a long entry. Just keep in mind, this stocks has earnings coming out on Tuesday. So this, of course, is always a bit of a question mark of what may happen after earnings. But if history is any indication, these earnings events, you can see them here, didn't really do anything in the past. Price didn't really move much. I think this might be the case here as well. So I find this as an interesting stock as well to trade on Monday. And if you're wondering, okay, there are earnings coming up, maybe I should extra protect myself with options. Let's have a quick look at our options heat index. One second, where do we have it? There we go. Yeah, heat index is, oops. Oh, wrong one. 1 second. There we go. 3.86. Yeah, options are relatively cheap here. So even with earnings coming up, the premium that you would need to pay for your options with 30 days to expiration at the month is only 3.86% of the stock price. That's pretty decent. That's not very expensive. Contrast this to the premium of USO, 13 point something percent. Okay, and the last one, Saipem SPA. All right, let's have a look here. Italian stock, I believe, in an uptrend. So a quick look at the, yeah, I mean, nice zone break retreat. I'm going to skip this one. I don't really know anything about this stock. There are also earnings coming up on April. So the trend is a little bit, it seems like to me this pullback might go a bit deeper. At least that's my feel for it. So I'm going to skip this one for our watch list. But nonetheless, it's an interesting technical setup. All right, so this was our first couple of candidates, but let's loosen things a little bit. So what could we do? Well, we could, for example, loosen the criteria of having or requiring a level 3 or level 4 pullback. Let's just do this and see what comes up. Okay, so this is done, and I do one more thing real quick. I'm gonna sort also our findings here by trend duration. I mentioned in the beginning, the longer, in my view, a trend has been going on, the better it is. So let's see what we can find here. I'm going to go fairly quickly because many of them will not qualify for me as a good candidate. I'm going to explain why, and many of them are in the same category. So Dollarama, a Canadian stock, a Canadian dollar store. I kind of like it. The only thing here is that it's a long-term uptrend, is that this support level here has been broken already, and we're coming from below into this support level here. To me, that's not the ideal one. I want to come from the top down to a level, not from below into the level. So I'm going to skip this one. Same for ECC Bank. You can see it here. We're coming from below into the level, not what I'll be looking for. Neuberger we had. Brambles Limited. Yeah, actually, this one is kind of an interesting one. Let me quickly have a look here at this Australian stock. Long-term uptrend, pulling up now on this consolidation pattern, finding support here at this key level at around 22. Yeah, you know what? I kind of like it. I'm not going to put it into our list, but potentially this could be a candidate for a long entry, anticipating a bounce off this level towards higher price levels. All right, Balfour Beauty PLC. Oh, one second. That's long break retrace. Yeah, but here the retracement is not deep enough for my taste. So I'm gonna skip this one. Berkshire. Berkshire, a bit more interesting. Here, we are indeed coming down to this key support level from the top. You can see the difference? The price is coming down from the top down to this level. These are the steps I typically look forward. Like, and this has happened in the past. Nice, like here, prices came down to this level, bounced, came down to this level, bounced, came down to this level, bounced. And this may happen here again. I'm going to add Berkshire to our list. It's not my absolute favorite. I'm probably not going to execute a trade on this because I think after Warren Buffett, I think some investors may just, stay a bit more careful of this company, but that's just a gut feeling that I have. All right. Perfect. All right. EHC, Encompass Health Corporation. Yeah, coming from below. Not interesting. Market Group. Yeah, same here. Coming from below. These are not the ones I'd like to find. All right, let's go to the ones which I actually liked. I did a bit of research before this webinar, so we have to skip a whole bunch of these because we're all coming from below towards this level. That's not the setup I'm looking for. And the first one that stands out right now is AbbVie. So AbbVie is a bit different. AbbVie here also has earnings coming out in a couple of weeks, but AbbVie is long-term bullish now in this sideways consolidation channel. I can imagine also here, prices may come down a little bit closer to this support level here at 204, and then may bounce off this level towards higher price levels. I'm going to add AbbVie to our list. We can see already it's not so easy this time around to find like really quality setups with this kind of approach. This is why I want you to stay open for an idea. Just because market conditions are the way they are right now, what if we loosen a little bit our criteria of being near a key technical level? Because, whatever, there's a lot of movement in the market. Sometimes price is coming from below into a level that is not as clean as I want it to be. What if we only require our stocks to be long-term bullish, in this case, more than 1,000 trading days, and they're showing the perfect pullback, either level 3 or level 4. That's all I require. Now I'm going to sort by trend duration from highest to lowest, and now we have a new list. Let's check it out. First one here, Range Resources Corporation. Look at this. It's actually a kind of nice. Here we have, in fact, we're near this resistance level. Prices long-term bullish for more than 1,000 trading days. Level 3 pullback as per trend radar right into this level here. Yeah, could be of interest. Even though I kind of feel for this one, again, it's a gut feeling that we may see a pullback down to this level here. I'm not sure how much exposure this company has to oil prices, if that plays any role, but I kind of feel that when oil prices come down, maybe Range Resources are going to come down further down as well. So I'm going to skip it for our watch list. Coca-Cola Consolidated is our next candidate. Let's check it out. Yeah, that's more interesting to me. Look at this. We are far away from a technical level. We'll be all the way down here at 147. I believe this may not happen at all. Maybe you're not going to see this level at all to be visited. So what if we consider a trade right at the current level? A level 3 pullback as per trend radar, coinciding with this first line here of Emi Rush, which can act as dynamic support. I kind of like it that way. So we're going to add this trade to our watch list based on these new criteria, even though we are only in quotes in a magnet zone. All right. Next one. Kronberg. I'm going to skip this one. I don't know too much about it. Again, level 3 pullback, but here we are just below resistance. Antero Midstream Corporation. Let's check it out. Yeah, I kind of like it too. Yeah, we pulled back 4 levels into the vicinity of this resistance level, which would be a zone break retrace setup, but we're not quite there yet. I think it might make sense to even start scaling into a long position right now in the stock, which is in a long-term uptrend. You can see it here. I like it. So I'm going to add this one to our list. I had one more, which I wanted to point out, which I'm just going to skip a couple of those ones here, which is FTI. Just 1 second. There we go. All the way at the end. FTI. Look at this beautiful uptrend this stock is in. It's a Technip FMC PLC. Let me quickly see what this company does. Engages in oil and natural gas projects. All right. Okay. Again, a bit of exposure to oil. It came down a little bit. Level 3 pullback, but look at this beautiful, very consistent uptrend. And I think maybe this pullback, this level 3 pullback, is all what we're going to be getting anytime soon. Maybe prices are going to come down a little bit further, but I think a level 3 or level 4 is all what we might be seeing in the near future. And then perhaps this could be also an interesting idea to enter into a long trade after a bit of a correction to the downside. So we're not entering at the top of this extension, but a bit further down. So I'm going to add FDI here as well to our list. All right, so this is pretty much the list that I had in mind for this week. I'm going to quickly review what we found, and I'm going to go to your question. So 8 symbols for next week. I'm going to quickly go through this one. Coca-Cola Consolidated. Yep. Dividends and earnings coming up, by the way, in the next couple of weeks. You can see here this little symbol here for earnings and dividends next to the name. I kind of like it. Let's see if our theory or my theory holds up, and that we can also find interesting trades when price came down to a key MA rush leverage average level. So I'm going to add this one to our list. And let me just quickly see, when was the last time we had Coca-Cola on our list here? It was back in January the 3rd. Look at this one here. It was down here. And price came down here. Zone break retrace set up. Look how it took off afterwards. Would have been a fantastic trade had we taken had we followed our advice at the time. So I'm going to add a new entry here with this particular setup into our log. Perfect. Save. Okay, close. Done. Antero Midstream Corporation. Yeah, also those ones that show a nice pullback after a high point here. I like it for scaling into a position. I think price may come down to the 19 level here, to this former resistance level, but perhaps not. So maybe scaling at the current point is not the worst idea. So let's add this one as well to our list. All right. Antero Midstream Corporation. Safe. Neuberger Behrmann Income Fund. What a name, man. Zone break retrace setup. So funds or income funds are meant to generate dividends. And for this, oftentimes prices are not as bullish, or my prices may even come down, but you collect a nice dividend along the way. So just keep this in mind. Because of this, there's a good chance that we may see a deeper correction here. But from a technical point of view, if we were to ignore that this is a fund, this would be just a regular stock, this setup actually is quite nice. Zone break retrace down to the level here. So I'm going to add this one to our list. Just keep this in mind. It's an income fund. It pays out regular dividends, which oftentimes has an impact on the bullishness of price. All right. Technip FMC PLC, FDI. I like it. I think this level 3 pullback might be all we can get in this very strong uptrend. Let's add it as well to our list. All right. Save. Berkshire. I'm not gonna put it to our notes here. I just personally have a bad. I just think that investors may lose a bit of trust in Berkshire after the departure of Warren Buffett, and this correction here might actually go a bit deeper. So this one I'm gonna skip just because of my gut feeling. I might be completely wrong, but based on my gut feeling. AbbVie. Yeah. I like it down here at key support. There's not really another level down there. There might be one here at 193, but I kind of like it for a long entry. So we're going to add this one to our list. All right. We had it back here in March 2025 at 210. At similar price level where it is right now. Interesting. Okay. So we're going to add AbbVie to our list. And 2 more that we have. We have the RTX Corporation. Yeah, very nice. I like it a lot. Beautiful, healthy pullback in a stable uptrend down to support here. Potentially our trade of the week in our newsletter on Monday. I kind of like the way this one looks from a technical point of view. And then we have Atmos Energy Corporation. Also nice one here. I just like to see a bit of a deeper pullback down to this level here to 180 to enter into a long trade here. So I'm going to add this one here as well. Perfect. Good. I think it's a nice list for next week. Let's see what happens. All right. So are there any questions, Niklas? And if not, do we have any symbol requests?
Yeah, BGR now at MA rush line 2 with a hammer pattern on Friday. Would you enter now with a stop loss below the hammer? There's a support zone around 1352 and 13.
Potentially. Yeah, I still like this one from last week. Yeah. If you're not in this trade, potentially this could be even now a nice long. Just wait until Monday, see where things open. If he gap down a lot, I would stay away. But if he open in a similar price level, maybe even gap up a little bit, yeah, I would consider entering long even today
What do
or
you think
Monday.
of the symbol NYT?
NYT, New York Times. I saw that one too. Um, yeah, level three pullback, long-term uptrend. I know New York Times, they must have a different business more now than just having printed news. I guess they have their online news of subscriptions and so forth. Look at, yeah, I mean, from a technical point of view, it's a nice long-term uptrend. And yeah, potentially at the current first ME rush line here with a level three pullback. I like it. Yeah. Because especially for stocks like this one here, where there's no other technical level nearby. The next technical level here would be all the way down at 62. That's probably too far. If you want to enter earlier, I think these pullbacks, level three, level four, as per trend radar, down to an MA rush line, an average line, might be all we can get before the uptrend continues. So I like it.
How about FAST? Fast.
F fast. All right. FAST, Fastener Company. Okay. So bullish for 772 trading days. Yeah. Here the bounce kind of already happened, unfortunately. If you had scanned on Tuesday night, you probably would have found the setup here. On Wednesday, it was to potentially go long. Now prices have moved up already a bit. Yeah, there's still room to go towards this level here at 48, but maybe wait for a bit of a pullback and then enter into a long trade. Yeah. All right. I think there was a question also from Fabian. Let me just see. He said he joined the lunch and took a trade on Feb 10 Oklo at 71.81. It finally turned green yesterday. Let's check it out. What is Oklo? I haven't looked at Oklo in a while. Level 4 pullback. Ah, boy. So you entered down here on this, yeah. So I can see why we entered here, why we discussed this trade. Long-term bullish down to this key support level. We thought, okay, potentially we're gonna see a bounce off that level. It didn't work out like this, so good that you didn't get stopped out. You stuck with that trade, and now it finally went up. And the question is, would you consider what would be a take profit level here? I think this one here, this intermediate resistance level here around 112, maybe 110 as a round number could be a good profit target. Yeah. All right. Is there a webinar showing the use of portfolio architects? Maybe in our lunch and learn session. Nicholas, can you take a note of this? Maybe I do a quick overview of how portfolio architect can be used. Yeah. All right. Okay. Any other questions? Nicholas, are you there?
We have IBIT as a symbol request.
IBIT. Okay. IBIT. IBIT. Okay. Oh, the Bitcoin fund. Yeah, it's very similar to what happened to the price action in Bitcoin. Now we also here are now clearing this level here. But as mentioned, when I talked about Bitcoin in the beginning, I want to see some space in between the candle and this level here. Right now, that's still some touching going on. Some separation would be good. And then I think the bulls might become in charge again. I'm hoping at least have a strategic long-term Bitcoin position with spot Bitcoin, not with this symbol here, for a recovery to the upside. No.
Thanks, Daniel. Can you take a look at NAVN?
NAVN, yes. NA like this. Let's have a look here. NAVN. Navan. Oh, it's a new symbol. Yeah, hard to say anything about a symbol like this. It's brand new. Just IPO'd, I guess, on in October last year. Yeah, not much to say. The only levels I see here is that there's resistance here at 18, and that's about it. So hard, with brand new symbols, technical analysis is always very limited. All right.
Okay. I'll add that
H.
massa and a last symbol then BMNR.
I was just gonna do
And
HNST
Massa
real
wants to
quick.
know, I explained how the reward to risk works for zone break retraces, which is a 2-to-1 reward to risk ratio based on the
Mm-hmm.
ATR and the level. Um, if you could review that on a chart, Daniel, that's what Massa requesting.
Zone break retrace.
Yeah, how the
Yeah.
target is determined.
Yeah. Okay. Okay. HNST, the honest company, that was one before. We have BMNR. Yeah, it's I don't think I would consider any long trades here anytime soon. We're bearish here from a trends point of view, and now coming up to this former support level, now acting as resistance at this level here. I would see this more bearish. Maybe if you come up here, maybe buy some puts if that's possible, if that's optionable. Or another leg further down, that would be my take here. Okay, and then we have BMNR. BMNR. Oops. If you can spell it properly, BMNR. Bitmine. Inversion. Yeah. All right. That was the company, if I'm not mistaken, which is into Ethereum a lot, right? Yeah, but it's not. From a technical point of view, unless you know something fundamental for the stock, there's nothing to be said bullish about the stock. So bearish trend, you can see it here making lower highs along the way. Prices came up a little bit towards this resistance level, but that might be just be a stopping point here, and another leg down may come. IBM, let's have a quick look at IBM. International Business Machines. Ah, didn't we pick IBM? When was it? Was it in our lunch and learn, or I forget? Yeah, I think there was, huh? I believe we had IBM on Tuesday in our lunch and learn as our trade of the day on Tuesday. Ah, nice bounce. I'm happy for this. I'm curious now, Nicholas. Did we have IBM last Tuesday? Do you remember by any
I think
chance?
we did, yeah.
Yeah, yeah, love it. Great, great pick. Now we saw a bounce, depending on how you entered. This is swing trading. Maybe book some profits already, had a nice move up, or stay in the trade and anticipate. Okay, in the longer term, we're gonna visit levels around 280 or maybe even 315 up here. And MSOS, real quick. Advisor shares pure or cannabis. Oh boy, let's have a look at this one here. Yeah, remember when cannabis stocks used to be a big thing? Not anymore. Yeah, I mean, from a technical point of view, not much to be said about this one. I would, if anything, I see this as a bearish stock. Masa says, can you add the ticket you? Yes, Nicholas, please also take a note of this and send this to me. Yes, we can add this one.
Yep.
Can you remind me how to input a list of symbols from an Excel file? Yeah, Donna, that's very simple. So it's also in the bootcamp. Donna, maybe check out the bootcamp. We have it there step by step. But what you need to do is to so what you can do, first of all, you can create a watch list based on symbols in an Excel file. Okay? You cannot add like random symbols which are not already in the dashboard to it. So the symbol already needs to be in the dashboard. But for those symbols which are already in the dashboard, you can upload a set of symbols into a watch list. That makes sense. And the way to do this is to go to this drop down here, go all the way down to the import function here. You will then get a dialog. Here you will select your Excel file. But two things here. First of all, you need to save it as a CSV file, first of all. And secondly, the ticker names, like IBM, AAPL, TSLA, and so forth, they need to be listed in column A of your CSV file, of your Excel file saved as CSV. But Donna, check out the bootcamp on how this is done step by step. All right. And what else do we have? Oh, long break retrace. Yeah, I almost forgot about that from Master. 1 second. So let's find such a setup. So long break retrace here. There we go. Let's go to Neuberger Berman Income Fund. And let's show the levels here. Okay. 1 second. Okay. Show long target and show stop. Okay. So what the indicator does here, and that's for this particular setup, it will look at where the resistance level is, the former resistance level, where price comes down to. That's the first thing it tries to figure out. So right now, the center point here is around 9.51. Then it uses the current volatility of price to, first of all, determine a proper stop level below this one. This is always the first point here. So in this case, based on the average candle size, the stop would be somewhere here at 9.28. Then it measures the distance between current price down to this level here. Let's say it's, I don't know, 50 cents. I'm just making it up. And then it calculates based on this distance a 2-to-1 reward to risk ratio. Basically meaning that the distance from this candle here down to this level is half the distance from this candle up to this target. That's how it does it. So it's really just a pure 2-to-1 calculation here. I hope this makes sense. So the distance from here to here is twice as big as the distance from here to down here. Okay. Yeah, and Niklas, please take notes of these tickers that we want to add.
Yep, U and GETY.
Yeah, perfect. And Aubrey says, yes, IBM was a 240 entry with stop loss at 190, target 280. Let me just go back to IBM one more time, just because it's always nice to have some success stories to look at. Just to see where are we right now. 253. Yeah, we still have ways to go. Yeah, so 280 would be right here below this support level. Yeah, that's what I thought, I believe, at this time. But you know what? Depending on how you get into this trade, if it's a pure stock trade, yeah, maybe hold on to it until we actually hit our target. But if you're in this trade with short puts, if that was an option back then, I just like to get out of these trades very quickly. Once we hit like 50% of decline of that short put, I just buy it back and move on. Yeah, I free up my margin. I'm no longer exposed to a risk, and I'll move on to the next trade. All right, perfect. Anything else, Nicholas? From what you can see?
Just looking through.
All right.
More from those ideas. You're sharing your watch list, right, Daniel? We have a question from Donna here. For those
Yeah,
who can't
you
attend the live lunch and
should.
learn, would you consider making a watch list in the dashboard for those ideas?
Yeah, but in the lunch and learn, we only really have one symbol. So I don't think I'm going to create a watch list just for this one symbol. But what you can do, Donna, just look it up quickly, maybe in the recording. Or, yeah, maybe I can do this. Just I know what you're saying, so you don't have to look up the recording painstakingly on Vimeo, find the section and see what the trade was. Okay, let me think about this, what we can do for the lunch and learn trade of the day. Perfect. All right. Great, guys. Well, thanks, guys, so much for attending. Thanks, Nicholas, for bringing all these questions to my attention. And let's see how things pan out. As mentioned in the beginning, today, the setups were a bit different because the market conditions are kind of special right now. So the setups that we typically see a lot, like a nice bounce down to a key level in the long-term trend, there were not so many of those. So we were a bit creative today, looking at only long-term trend stocks with a nice sweet spot pullback as per our trend radar. So it was our alternative scan for today. All right, guys, with this, a quick reminder, if you want to try out our great dashboard, simply go to tradingindicators.com/view. Try it out for a full week. You will have to put your payment information, but you will not be charged within that week. You can cancel at any time. You will get a link on how to manage and cancel your subscription once you sign up. And of course, if you want to stay on, we have interesting monthly and yearly options for the dashboard. All right. With this, guys, I wish you all a great weekend. Get some rest, soak in some sun if you're in like beautiful sunny places like Montreal today, which is what I will do. And then I see you all next week when we have our lunch and learn session on Tuesday and next Saturday when we will have our next live scanning session for the most interesting swing trading setups for the week ahead. With this, guys, take it easy. Talk to you soon. Bye-bye.